Now, the tightening of monetary policy in response to high inflation rates prevailed in 2023. This impacting economic growth in many countries hard, with the global economy still facing a myriad of challenges. A survey by Chief Economist at the World Economic Forum has pegged the outlook for growth as fraught with uncertainty. To unpack what this means for emerging markets, we're now joined by Jameel Ahmad, Chief Analyst at GTC, an online trading brokerage based in Dubai. Thank you so much for your time, Jameel. Of course, to gauge sometimes what happens in the future, we have to go back. And of course, as the year starting, kind of have to look at 2023 as well and how that will spill over into 2024. How troubling was the economic environment for emerging markets in 2023?
2023 was simple. There was nothing that could have gone any worse for emerging markets when it comes to investor sentiment, specifically the rebound and the revival of the US dollar. I think 2023 proved that, you have to look at the facts, because 2023 was all about the demise of the US dollar based on the US economy was supposedly going to crash. You had so many recession forecasts. And that's why one of the outtakes I have for you guys today as like a special present is that 2024, we shouldn't forget that recent history can repeat itself, because there's a lot of excitement about the dollar index hitting 100. The Federal Reserve are going to cut interest rates as early as 2 months from now. This is going to be amazing news for emerging markets and so forth. And yes, very much on the headline, that was it. But sometimes you do have, buy the rumor, sell the news. What happened with Bitcoin on the ETF last week was the greatest ingredient of that, just from recent memory. But I do think that 2024, we should have a better outlook for emerging markets, because at some point, developed central banks will start reducing interest rate policy. My take here is that we might have got too far ahead of ourselves, expecting it to be in March, and that the ECB will quickly be after, and then we'll have the Bank of England and so forth. I think that we will not see this for some time, and that we were going to see 2024 be more about emerging markets.
Yeah. I mean, Jameel, as I mentioned in the intro, of course, in Davos, the chief economists that were surveyed there had actually said that the global economic outlook is fraught with uncertainty. And of course, there is still the continued effect of inflation and still tight monetary policy, and also China's weak domestic demand, and with that lack of a bazooka stimulus there. What are you expecting for the emerging markets growth trajectory this year?
I think that emerging markets growth, what we're looking for now is, are the central banks aligned with policy? Somewhat, yes. That helps investor sentiment, because that helps investor confidence. The issue here is that we still are going to see growth outlooks be downgraded.
Yeah.
That means that, where do investors put their money, and does that money actually lead into tangible investments? Another concern we have for this year is the geopolitical conflicts and that risk outtake. What does this mean to investor sentiment? Well, actually, what we might see is a bit more of a left field move, that investors on a global level are looking at what's happening in the West right now. And it's quite clear how the consumers are behaving towards this. So what we might see instead is that, rather than the usual, we're going to buy the dollar as a safe haven, I just wonder whether we might see emerging markets be more diversified, and we diversify a bit more into emerging markets, because investors will also look long term. Long term, we're expecting a lower interest rate policy. We do have some good signs from inflationary pressures coming down. The issue is that these geopolitical tensions, and it's changing day by day, with what's happened in Yemen, what's happened today with the supposed thing with Iraq and Iran's involvement and so forth, that is a risk for inflation getting higher should we have an oil price. And this is where, we have a bit of a catch-22 scenario, because we do have the right environment, but this investor sentiment to be much more positive for economies like South Africa, the Rand, the Johannesburg Stock Exchange Index, and so forth. But we also have risks that we can't afford to ignore. And unfortunately, when it comes to geopolitics in the Middle East, it is sensitive, it is volatile, it's ever-changing, and it's also unpredictable. And investors do not like unpredictability. And that's what keeps us coming back to the US dollar. Happened in COVID, happened in the start of the the Russia-Ukraine crisis. We saw a little bit of it when it came to what's currently taking place, unfortunately, in the Middle East, in Gaza, but it wasn't too much because of the dollar being so strong. And there's a big concern that now we're starting to put back some interest rate expectations a bit lower for the US, whether we do actually start to see a bit more of recovery in the US dollar And over January, that might be a little bit of a winter blues moment for the South African rand.
Yeah. And I mean, as you're talking about geopolitics, in 2024, there is it's a heavy election year for a significant portion of the world. Could politics induce heavy volatility for emerging market equities and bonds? But also, how much will you be watching that political risk?
I think we have to watch it from the second half of this year. And the reason for that is actually not so much what's happening locally or regionally, but it's because we have the US presidential elections coming up.
Yeah.
And that is going to be a big give and take here. But my personal opinion is that I'm not refusing to rule out another run for Trump. No matter what may happen in the US political spectrum, there's no doubting that the current leadership was supposed to unify the country.
Yeah.
There's a lot of hope about unifying global affairs, foreign policy, and so forth. If you look at situations like what's happening in Afghanistan and what's happened, now we have what's currently happening with Yemen, Iran, potentially, and unfortunately, what is clearly, the situation with Israel and Gaza, and the Democratic nominees is nothing but a sure thing. And that's why whoever does become the Republican candidate, given the frustration, the global protests, how we're having boycotts and everything else, it wouldn't surprise me at all if we do have a Republican candidate. And if that candidate is Mr. Donald Trump, we could have a second term.
Yeah. Nothing is certain in this world, Jameel. It's quite interesting because I never thought that we would ever get a Trump comeback. But of course, there is a possibility of that. So we will be keeping a close eye on that. And just so, as we wrap up the conversation, I mean, a number of reports have been expressing, with analysts expressing their appetite for investing in emerging markets. Do you have the same view? And if you do, what is making them attractive?
They got oversold historically. If you look at what's happened over the past 10 years, and again, now we can talk about more monetary forms like the end of quantitative easing, when the Federal Reserve first started raising interest rates at the end of 2014, 2015, that cycle. Emerging markets since then, they've just been battered by bad news after bad news after bad news. Let's start with the populism impacts. Firstly, it was in Brexit with the United Kingdom. Then we also had the Trump election, the America First, America Always campaign. US stock markets were the only place that investors want to be. And it wasn't long after that, we then had COVID. Now there's geopolitical aspects. But unfortunately, the world is still uncertain. So although emerging markets are certainly attractive from a valuation standpoint, if you really want to hold onto your position, we're living in a world where we never know what's going to happen tomorrow.
Yeah.
And we're supposedly pinpointing exactly when the Fed are going to cut interest rates, by how much, what other central banks are going to do. And quite simply, we do have to live in a more day-to-day world, especially when it comes to geopolitics in the Middle East. And that what makes me a bit more resistant and reluctant to be as optimistic on emerging market outlooks as perhaps we should be if we just look at it from a valuation standpoint alone.
All right. Well, thank you so much for your time and just giving us that outlook for emerging markets in 2024. Of course, we will be delving deeper into these specific issues as the year unfolds. Thank you so much for your time, Jameel. That was Jameel Ahmad, Chief Analyst at GTC, an online trading brokerage based in Dubai.